Welcome back to the LPR Trading Group YouTube channel, guys. I want to share with you guys our Sunday night or weekend market outlook for the upcoming week here. So what I typically do is I'll go through an outlook for the coming week for the chat room. I'll post it on our YouTube unlisted. So it's our private YouTube session or section. We send out the links in our Discord channel and I sort of go over what we're going to talk about today. I just want to give you guys a sneak peek, give you guys a refresh YouTube video here, and I hope you guys enjoy. So what we're going to do is we're going to look at sort of the market, where the market's sitting at currently, what we're potentially expecting for the coming week, and what happened last week. So as we know for 2022, really people think the market's selling off. At this point, no. We're sort of in a consolidation area here. It's a huge range, don't get me wrong. We get a 500 point range here top to bottom. But essentially, we are in a range. We're trendless. The market gives us trends for a week or a few weeks, and then trend reverse and gives us a trend in another direction. A lot of people are saying it's a super difficult market to trade. In my opinion, it's not super difficult. As long as you can catch the overall trend, your big picture ideas are right, and you can understand the market context, you can grab a lot of trades in this market. Why? Because we have market days that are offering 80, 100, 120 point, 150 point range. Now, when you have days that are giving you this much range, if you can find a setup intraday, it's not unheard of to catch 50, 60, 70, 80, even 100 points on a move. So this is sort of our ES big picture daily right here. One level that I have on the daily chart marked is this 4100, this blue line. So if we look at this area right here, these were previous year's lows. So 2022 lows prior to these days here. So these days down here, which was the 2nd and the 6th, they actually wicked below this low. But as you can notice, we're not closing below this low just yet. So this 4100 area is playing a huge role. If we jump down to, let's go down to the 45-minute chart. We go down to the 45-minute chart and we sort of look at last week's price action, which is right in this area. Maybe I'll circle it just to make it a little easier. Friday, Thursday, right here. Ooh, that's not the circle I'm looking for, guys. Sort of right in this area is last week's price action. The volume candles, or the volume that we're getting on those candles from last week, are larger than prior days and prior weeks going back. So what this tells me is there's a lot of interest down in this 4100 area. There's buyers sitting here trying to pick up price. There's sellers putting a lot of pressure at market trying to push price down. We do have some other areas on the chart to the upside for sell pressure or supply zones at 4300 here, 4291.50. So if we can see right in these areas, right here, right over here, this is where we're getting a lot of sell pressure when we're bouncing currently. Okay, so if we look at our current range on the market, I would say our current range on the market right now is a 200 point range from 4100 to 4300. We can see that every time we get down to and around 4100, which again is this blue line, price holds up, price holds up, price is trying to hold up. Every time we get to 4,300, price is getting rejected. So we're playing this 200 point range essentially. I'm not saying that the market is not going to sell off and it can't sell off. It can, but in my opinion, if the market's going to sell off and that's what it wants to do, we have to get below this 4,200 or 4,100, hold below and start pushing lower. We do have some demand zones sitting down here, 3965, 4030, and we do have 4,000, which is going to be a psychological number, and I'll mark that as a key level right now while we're on this video. Delete some of these. So really, instead of trying to figure out where the market's going to go, what it's going to do, and what the next breakout or breakdown is going to be, recognize that we're inside of a 200 point range. And if you can capitalize 50 or 100 points on each side of this range, you're doing very well, okay? You're doing very well. What we did notice was FOMC here. I think this was Wednesday or something. It was the 4th. Anyways, we got a huge rally off this FOMC. So a lot of people, they made money on this. A lot of people, on the other hand, got stuck and they were in some huge trouble. What did smart sellers do here? They didn't try and sell into the FOMC rally. So as FOMC is rallying to the upside, they did not try and sell into this. They waited until price got into 4,300. Supply got weak, held under. After our session, they started rolling it. They continued to roll at the open. So these are the kind of things that we wait for. If we were looking at the open on Thursday, which was this open right here, we did notice that we were inside of supply, and inside of supply after this FOMC rally. Once we got in there and we got weak, we looked at our open and said, okay, if we are weak off the open, this is the trade. We do not want to be taking longs off the open into supply because the room we have back down to our known area of 4,100 gives us a much bigger reward. Now, if we look at this fade here on Thursday after the FOMC rally, we're at 4,264 here was roughly the open price. Where did we fade to? Low of day was pretty much 4,100. Okay, so where do we get all these levels from, and how do we mark these out in order to make sense on our charts? Well, we review the charts on Sundays or over the weekends, so we can go back and see where price was acting and reacting off of for the following weeks to see what price action could potentially do in the coming weeks. And this is how we make our plan. Of course, every morning what you're going to do is you're going to get on the chart for 10, 15, 20 minutes. You're going to make micro adjustments. Once you have your big picture levels in, like we have here, you're going to make micro adjustments as the morning session opens or prior to the morning session, and you're going to adjust your areas and levels to make sense for your trading day. So without being a forecaster, because that's not what we want to do, I want to tell you a few things that could happen here with this market into next week. I sort of already mentioned one. Market into next week stays really weak. We push under the 4,100. We sort of hold under the 4,100, and we can make a move to the downside. We could also push under 4,100 and hold this range for a little while. If the market wants to get strong, which I'm sort of leaning towards myself, I would expect something like this. Market pushes down, tries to break lows. There's no sellers under the lows. Buyers come back in, hold price up, reclaim 4,100, and then we go for a push to the upside just like this. Now, we have these ideas in our head just in case this is what is going to play out. We don't marry an idea or marry a bias. We just say, okay, if we're going to be long, this is what we need to see. If we're going to be short, this is what we need to see. In my opinion, I would rather take the long. We're currently sitting inside a demand zone. I would rather see this play out and get long rather than we break the 4,100, hold demand, pull back into 4,100. We could possibly come back, hold this demand again, and then push up. Even if we don't do that, we're shorting inside of demand zones here. There's another one here. We could push back up. We're sort of at the area on the chart where buyers need to make their move to hold price up. Otherwise, sellers are going to take control. So typically bad retail is going to short the lows by the highs, in my opinion, and really not an opinion. Just by looking at this chart, if you're shorting down here, what are you doing? You're shorting the lows, hoping for a break below this area and a hold below this area. This is what you're hoping for, okay? The trade that we would be looking for in the chat room, if we broke below the area, we would let all bad retail short this. If we came back, we would take the second entry, as we call it right here. This is a much safer entry. You can get way better risk versus reward. It is also a higher probability trade and is proving the trade wants to be short or has a better chance of being short, and sellers coming in, shorting pops and pushing this to the downside. Again, I don't love this idea, but it is definitely my playbook for the coming week. What we'll do to end this right here is I'll pull up this Bloomberg economic calendar. This is also something that we look at. And we go and we look at the events for the coming week. So this looks like a little bit of a thin week here. I noticed that most of the economic events like the CPI, jobless, PPI are launching before the markets open on Wednesday and Thursday. As for Tuesday, We have this EIA, it's like an energy administration. We have that at noon on Tuesday, so that could definitely influence the market, create some volatility. It's at lunchtime. It's going to be at a weird time. So I sort of like this because it gives you the open session to really grip and rip a few trades. The way I trade any of these bigger economic events, like the energy stuff going on here, crude, um, you know, PPI stuff, whatever it is, I like to liquidate my positions or 80-90% of my positions 10-15 minutes before the economic event, and then I like to wait out the volatility settle after for about 10 or 15 minutes. Sometimes it takes longer, but I don't want to be caught in an event like this or an FOMC event for that matter. And if you guys are wondering why, I'll actually take a second here and show you if I can go back. Yeah, here we go. So this was FOMC right here. FOMC was at 1400. Okay, so if you look at 1400 right down here, this is when the Fed meeting started here, and look at the volatility it created for the rest of the day. Going into Fed, we're moving sideways. Why are we moving sideways? All the good traders and all the big money are staying sidelined. They're not trading leading up to an event. They want to keep their money in their pocket, cash as a position, and they don't want to gamble the FOMC. Now, relative to this move right here, this spike in 4 or 5 minutes doesn't look very crazy. But if we look at it, this is a $20 move to the upside, $30 move, right? We have 83 and we spike all, well, $25 move, spike all the way up to 42.08. So let's say you're short here. Look at this pain that you're going through, right? Pushes up, gives you a little bit of hope, and then rips your face off. Okay, so I don't like being in positions going into these moves. You could get lucky and be on the right side, but if you're looking to get lucky, just go to the casino and play some game where you have maybe a small edge, or the casino has a very small edge on you and you could still come out with some money. If you're gambling in the market, chances are you're going to lose very fast. So a little recap. We have our plan there on the bigger picture, the daily, the 1 hour, what we think or what we forecast the market's going to do. And listen, I'm not a forecaster. We're day traders. I really don't care what the market's going to do. I just want to have a plan for both sides. And we also showed you guys the economic events. So with that, I hope you guys enjoyed this session. Leave me some feedback down in the comments. As always, like, comment, subscribe, and we'll chat with you guys soon. Good luck on the charts.